Hey everyone, it is Julie here with TipRanks, and today we're taking a look at a few top analyst stocks in the finance sector. So let's get into it. All right, guys, welcome back. Thank you all so much for being here. Today, we're going to take a look at a few of the top ranked analysts in the financial sector and some stocks that they've recently rated a buy. We're going to take a look at these companies, what it is that they do, and how the rest of Wall Street weighs in as well. We found these stocks today under the top analyst page on TipRanks. Under the expert section, we're headed to top analysts, where we're going to see the best performing analysts on Wall Street. We can narrow it down by sector, which we're going to set to financial, and other benchmarks such as the time frame period and their main geographic coverage. And just before we get into our three stocks, this is a friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. You can also download the TipRanks mobile app using the links in the description down below so you can access all of your favorite investment research tools on the go. Now let's get right into our three top analyst finance stocks. First up, we're looking at a stock recently rated by Mark Hughes at Truist Financial. Looking at his analyst profile, Mark currently has a 75% success rate and is ranked number 9 out of nearly 9,000 Wall Street analysts, and he recently reiterated a buy rating on 6th Street Specialty Lending. Trading under the ticker TSLX, they're currently priced just shy of $21 per share. They've gained 8% overall in the past year. In the last 3 months, they are down slightly, dropping off along with the market last week. 6th Street Specialty Lending is a specialty lending company with a focus on lending to middle market companies. Their creative financing delivers fully underwritten solutions in a variety of industries and across the spectrum of capital structure. Their unique portfolio construction allows them to manage a well-diversified, low-volatility current yield portfolio, providing benefits to both their financing partners and investors. They typically focus on a company size of $50 million to $1 billion in enterprise value and a transaction size of $15 to $350 million. The company does also pay out a very attractive dividend with a base quarterly amount and then a supplemental amount on top of that. With a dividend yield of over 8.4%, they currently have a base quarterly dividend of 46 cents and a supplemental of 6 cents per share. This will be for shareholders of record at the end of August and mid-September, with payments on the 20th and 30th of the month. 6th Street did just share their latest quarterly report last week on July 31st. Results were a bit mixed, with a miss on earnings per share, but investment income and net investment income per share beating. For their Q2, they did report earnings per share of 50 cents, which fell short of estimates. However, their net investment income per share came in at 59 cents, which was a beat. The company saw their net income increase over 13% to $107 million. The company saw their investment income increase over 13% year over year to $121.8 million. We've had 4 Wall Street analysts reiterate buy ratings on the stock following that earnings report, and with 5 current ratings altogether, it does come in as a unanimous strong buy. The average price target comes in at $22.70 for an upside potential of 11%. Looking at those recent ratings down below, we do have Mark Hughes, our top analyst from Truist, there at $23 for an upside of 12.7%, and there's a couple at that price, which is our high end, and our low end is $22 from back in May at 7.8%. For our second stock, we looked at the recent coverage from top analyst Chris Kotowski. Chris is an analyst from Oppenheimer and currently has a 72% success rate and is ranked number 6 out of nearly 9,000 Wall Street analysts. He recently reiterated a buy rating on KKR Company. They trade under the ticker KKR, currently priced at $108. Their stock has climbed 82% over the past year, and in the last 3 months has gained 10.7%, also dropping off near the end of last week. KKR is a leading global investment firm. They manage multiple alternative asset classes, including private equity, credit, and real assets, with strategic partners that manage hedge funds. They invest their own capital alongside the capital they manage for fund investors and provide financing solutions and investment opportunities through their capital markets business. KKR also just shared their latest quarterly report on July 31st, where they did come out with an earnings beat. For their Q2, they reported earnings per share of $1.09, beating expectations by 3 cents per share. The company saw their fee-related earnings of $755 million grow 25%, and revenue of $4.17 billion grew nearly 15% year over year. They also saw their assets under management grow 16% to $601 billion. Our top analyst, Chris Kotowski, isn't the only 5-star analyst that has weighed in on the stock. We also heard from an analyst at Citi who increased their price target and provided a little commentary. The analyst noted that the company reported strong results and a positive outlook on the earnings call as the deployment environment continued to show signs of improvement, while fundraising saw one of its strongest quarters on record. KKR has 13 analyst ratings altogether, coming in as a strong buy with 12 buys and 1 hold. And the average price target comes in at $137, implying an upside potential of 26% from current prices. Looking at our ratings down below, every analyst weighing in after that earnings report did increase their price target. On the high end, we do have a Bank of America analyst here at $159, which would be an upside of 46%. Our top analyst here, Chris Katowski, came in at about 18% upside, and our low end price target is a hold rating from Morgan Stanley before the earnings with a downside of about 1.5%. And third on our list today, we're taking a look at the coverage of Phil Hardy. Phil is an analyst for Scotiabank and currently has an 80% success rate and is ranked number 39. You may notice he covers Canadian stocks here, recently weighing in on the Trisura Group. The Trisura Group trades under the ticker TSU on the Toronto Stock Exchange, but is available on over-the-counter markets here in the States as well. Over the past year, the stock has gained 29%, and in the last 3 months, it's down 4.6%. The Canadian-based company is engaged in the provision of specialty insurance. They are a leading specialty insurance provider operating in the surety, risk solutions, corporate insurance, and fronting business lines of the market. Their operating subsidiaries include a Canadian specialty insurance company and a U.S. one as well, with their Canadian specialty company starting writing business back in 2006 and their U.S. entering the market in 2018. Trisura did just share their latest earnings report on August 1st, where we did have some mixed results with a slight earnings miss, but some strong revenue growth. For their Q1, they reported earnings per share of 65 cents, which fell 1 cent short of estimates. But the company did see revenue of over 772 million Canadian, which grew 16% year over year, and they noted that their net investment income grew 42% year over year. They said they saw increased earnings from their U.S. programs platform and higher net investment income. The stock currently has 7 analyst ratings and does come in as a unanimous strong buy. And the average price target is just shy of $61 per share for an upside potential of 41%. Looking at those ratings down below, we do have quite a few 5-star analysts weighing in. Our top analyst, Phil Hardy from Scotiabank, increased his price target, giving it an upside of nearly 46%. Our high end comes from KBW with an upside of 92%, and our low end price target comes in at $52 for an upside of 20%. So that is a look at 3 stocks in the finance sector, all coming in as a strong buy and with recent ratings from a top analyst. Let me know your thoughts on these companies and whether they were on your radar or not. I always appreciate hearing from you guys. And of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just showing you what those Wall Street analysts are looking at. So make sure you do your own research and due diligence. Thank you guys so much for watching. Have a wonderful day, and I'll see you back here next time.